Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really glad to have with me once again Robert Giustra. He's the president and CEO of Columbus Gold. Robert's been with us before, as I mentioned, to talk about Columbus Gold. It is a company that I have recommended in my newsletter. It's one that I own shares of personally, and I've learned to know Robert over a number of years. He has an excellent track record and has a good background in the financial sector as well as in the mining sector. So thanks for joining me again, Robert. Good to have you with me. You know, I should mention, I guess, to our listeners, your stock trades in Canada under the symbol CGT, and you can buy it down here in the States, as I have, under the symbol CBGDF. There are 141.6 million shares outstanding. Earlier today, at least, I don't know where it's trading in the last hour or so, but I saw it trading at 62 cents in Canadian dollars, around 48 cents in U.S., giving Columbus Gold a market cap of around $68 million. Well, I'd like to start by asking you to tell our listeners a little bit about your 100% owned Montagne property, gold property in French Guiana. It's really a very advanced project, and from what I can see, Robert, more than justifies your current share price. But tell us a little bit about this advanced stage project.
That's right, Jay. It's called the Montagne d'Or gold project. Rightfully so. The locals have been calling it that forever because there's in fact a large gold resource there. It's 5 million ounces, grading about 1.5 grams, which as you know is a very good grade. It's in French Guiana, which politically is part of France, so it also benefits from being a safe mining jurisdiction with rule of law and security of tenure and all those things you expect in a Western democracy. It's a project that you could actually drive through, which is very rare in this part of Latin America. It's open pit, and it has excellent metallurgy with 97% recoveries. It checks all the boxes as far as a gold project goes, Jay.
Yeah. So you did a pre-feasibility study on it, I believe. Robert, could you talk a little bit about that? How did those numbers come out?
We did. As you know, it's the initial economic study in advance of a feasibility study, which we're expecting later this year. But we used a $1,200 gold price and an NPV 5%, and that resulted in an IRR of 23%, which is rather robust for a preliminary economic assessment of this size. All-in sustaining costs are quite low. I think really the key is low-cost producer, $711 an ounce, cash costs of $582, Jay, which puts it in the bottom quartile of potential producers. In the first year, we'd be producing 273 ounces. In the first 10 years, rather, 273,000 ounces a year, which would make it one of the largest producers in the top 40 in the world for annual gold production, and with an average grade of about 2 grams per ton, which would make it one of the highest open pit grades in the Americas for a gold project.
Well, certainly, and you mentioned the economics at that stage were done on $1,200 gold. We're looking at something like $1,350 gold. What sort of advantage would that give to the economics? I would think very substantially, assuming, of course, that the costs don't go up along with the price of gold. But what are your thoughts in terms of how that might enhance the net present value of this project?
Well, you're exactly right, Jay. We're probably in a new gold cycle. I agree completely with the sentiments of your previous guest. I was listening in there with Michael Oliver. Was that his name?
Yes, Michael Oliver.
I agree completely. We're probably in a new gold market, but we're at the very beginning of it. It's very early days, and the project benefits substantially from an increase in the price of gold. For every $1 increase in the gold price, the NPV of the project increases by $1 million. Under the preliminary economic assessment, the NPV worked out to $450 million US. So a $100 increase in the price of gold, and again, it was $1,200 for using the PEA. Gold today is $1,350, appears to be on an upswing. For every $100 increase in the price of gold, the project NPV increases by $100 million.
Wow. That's pretty substantial. Now, putting a project together, this is a sizable project, as you said, 273,000 ounces. That was the first year, I believe, with a slightly higher grade in the first year. But how there's probably a big capital expenditure involved here, Robert, and it takes a lot of expertise. So you have teamed up with Nordgold, I believe it is. They have been very successful global operators, gold mining company. What can you tell us about the relationship you have with Nord and what they have to do to earn into to this project, which at this stage I believe you own 100% of, right?
That's exactly right. So we're a junior mining company, as you know, Jay, and our expertise is in discovery and exploration and taking the project to the point of completing a feasibility study. At some point, junior mining companies have to team up with more senior companies that bring the expertise to actually construct the mine. And that's what Nord does. Nord is funding the feasibility study. That feasibility study will be completed this year, but we are carrying out the work. It's all our people on the ground carrying out the work. Nordgold is writing the checks. And at some point, the feasibility study will be complete. That'll be near the end of this year. And Nordgold will take over as operator, and then that's when their expertise becomes paramount in actually constructing the mine. Nordgold is a top 10 producer worldwide, gold producer. In the last 8 years, they've put 9 gold mines into production, and they've got 2 under construction right now.
And what is the arrangement? What do they have to do? They're earning, I believe it is about 50%. Is that the way it is? They have to deliver 55% 55%
on completion of the feasibility study. They have until March of next year to do it. That would be kind of close. So they're going to aim to complete the funding of the feasibility study by the end of this year. And I'm pleased to say that we're well on track for that.
Mm-hmm. All right. So I mean,
that feasibility study, they will earn 55%, and we will own 45% of a feasibility stage, large gold project with plenty of upside to get even bigger.
Well, I mean, if we're looking at your NPV at $450 million, you cut that in half, or 45, 55, or whatever, and then you add another $100 or $150 to the gold price, as you mentioned, to be another $150 million in market in the NPV, 5% discounted NPV. I mean, clearly, your 45% of that project alone exceeds your current market cap, which I mentioned a moment ago was only about $68 million. So that tells me that if this project is as good as a PEA suggests it is, that your stock is grossly undervalued on the basis of this one project, and you have other things which I want to get to in just a minute. But would you agree with that? Is that how you see it?
Correct, Jay. We're greatly undervalued at this time. I think you're bang on. On completion of the feasibility study, just based strictly on the NPV, we should see a substantial re-rating of our share price based on the NPV. And as you pointed out, we did use $1,200 gold, and for every dollar increase, that NPV goes up by $1 million. So the upside is substantial. But I think I'd like to point out that the downside, there isn't much downside at our current market cap because we're greatly undervalued at this time.
Mm-hmm. Very important consideration.
There's protection on the downside, and I think that needs to be pointed out.
Well, that's right. I mean, if you didn't have this asset and you were just looking at your exploration stories, although I want to ask you about that, you do have a very good project, one that you've had some success with early days still in Nevada. Do you want to talk to us about that a little bit? Tell us a little bit about that project.
Well, as you know, Jay, we started out as a Nevada prospector. The objective was to evaluate projects at a very early stage and assess principally through drilling, which had the potential to be called genuine discoveries and potentially form deposits with some drilling. And that was a 7-year exercise that resulted in the discovery of a project we call Eastside, which we know has great upside potential, and it's a project that we will maintain 100% interest in.
All right, and you're spending some money exploring that now. What can you tell us about the project so far? You've had it is an oxide open pit heap leach target, I guess, is probably what you're thinking. And as I understand in reading about it, probably oxides go down deeper than is typical, which would be a positive, I would think.
Yeah, as you know, it's much in terms of production costs. It's much cheaper to produce oxides than to produce from sulfides. In Nevada, there are a lot of issues with what we call refractory ores, and that doesn't seem to be a problem here. Mm-hmm. The oxide ore at Eastside is indicated to a depth of almost 1,000 feet. Mm. So the project is not exclusively oxide. At some point, you're always going to get into sulfides, but we don't have problems with refractory ore in the sulfides when you get deep enough. But this is an open pit project. It is an open pit project in perhaps the best mining jurisdiction in the world. It benefits from amazing infrastructure. There are power lines that run through the property claim block. There's the main highway from Reno to Las Vegas that runs right next to the property. There is shallow water nearby, which is a problem for a lot of operations in Nevada, but it's not a problem at our project. It's BLM land instead of forestry land, so it's easy to permit. It really is a dream location to find a gold mine, and it appears it's too early to say it's a gold mine at this point, Jay. It requires a lot more work, but we've got 2 drills turning, and we have a substantial drilling program presently underway, and the deposit does appear to be a very large oxide gold system, and we think that there are only 2 projects in all of the United States that compare. One is Cripple Creek, and one is Round Mountain, just 30 kilometers to the north of us.
Compare, you mean geologically in the model, or how do you mean that?
Geologically, comparison? And also in terms just the sheer size of the mineralized gold system of the property. It is very large. We're drilling holes with very wide spacing, and the gold is everywhere. And we're presently drilling an area that's well over 1 kilometer long and half a kilometer wide, and the system just keeps getting larger.
When might you have some a resource calculation here? I think is that scheduled for towards the end of this year, possibly?
The objective is to have one in the fall of this year. We don't know at this time if it's a resource that we will be in a position to make public. As you know, Jay, the engineers, third-party engineers, have to have a look. They may come back and say you need to have another hole here and another hole there, sort of tie it all together. But our objective is to have a resource there in the next 6 months. And if everything continues to go well, and it's going very well, it could be as early as this fall.
How much of this project, and what, I don't know if you said what the size of it is, but how much of this very large claim area have you really looked at so far? Have you put drill holes into? Let's put it that way.
It's really untouched. It's a district scale discovery. We call it district scale because there are numerous targets that look exactly like what we call the original target, which has been the focus of about 98% of our drilling to date. There's so far 8 major targets have been identified on the property. They all look identical with up to 22 grams per ton at surface, and they need to be drilled. Mm-hmm.
I guess continuity is always one of the issues with these properties, and so I suppose that's part of what you're trying to do. But for the time being, it seems as though you're doing sort of spacing out, as you mentioned, widely spaced drill holes, so just to try to get a sense of the size and structure here, I guess.
Well, the mineralized system is so large that we drilled with very large spacing. What we call sort of wildcat holes, Jay, all over the property, trying to identify the areas of the property that held the best grade. Only a bit over a month ago, we started to focus in on 2 areas where we got the best grade. In one of those areas, we intersected, I believe it was about 7 grams per ton over 20 meters, which is quite impressive.
Yes.
In another area of the property, 0.7 grams, which isn't as high of a grade, but very, very long intercepts of 0.7 are just as good as you know.
Sure.
We were getting 500-foot intercepts, which are extremely unusual in Nevada, to be drilling continuous 500-foot intercepts, fully mineralized.
Yeah,
Those
I mean,
areas are of focus presently for our drilling.
All right, so we might have some drill results coming out sometime in the near future?
I would expect to see some drill results over the next month. And
all right, so
potentially a resource estimate, which we think is going to be impressive, perhaps before the end of the year.
All right, so drivers for the stock, those that you're thinking of buying these shares, what might people be looking for? I guess drill results and news from Columbus in terms of the South American project?
Well, I think there's two major catalysts. There's the feasibility study before the end of the year, and within the next 6 months, a maiden resource at our Eastside project in Nevada.
All right, well, we'll have to leave it go at that. It's certainly an exciting story. It's one that I'm tracking for my subscribers, so those of you who subscribe to my letter will certainly be kept up to date, and also you should go to the website of Columbus Gold to keep up with that as well. Thank you very much, Robert, for being with us today, and we'll look to do it again sometime soon.